Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have John Colescott, Chief Investment Officer at Closed-End Fund Advisors, known as CEF Advisors, to discuss why it's important for investors to have granular level data on closed-end funds. It's great to see you as always, John. Welcome back to Trade Talks.
Enjoy being here, Jill.
Thank you. And why is it important for investors to have precise data on closed-end funds?
Well, it may sound very simple, but I mean, at our firm, we're one of the largest users of closed-end fund data, being so focused in the sector. But we found through our careers that a lot of data providers try to fill a closed-end fund's data into the framework of an open-end fund or an ETF, or basically just check the box they have good data there or good enough data because they have to cover everything in the universe. And that's not bad. I mean, encyclopedias are a great way to learn about life, but it's not what you typically use in a college class. And so we've done a really good job of covering the entire listed and non-listed closed-end fund and business development company universe. Those are all closed-ended management companies, really from a granular way, from expense ratio data to leverage data to holdings data, to doing a really interesting thing every morning. Some of the net asset values, which is the most basic data point for closed-end funds, have disagreements between the fund sponsor site, our Nasdaq feed, and a tertiary feed that we have for QA work. And we have a team that does the work at 6:30 in the morning, making sure we have the best option of NAV for our clients that literally trade daily. And so when we think about how we're using this data, we look for the freshest press release, the freshest fact card, and we QA it with tolerance bands and the fact that we actually do trades on this data for our clients as kind of the threshold for quality.
And the industry is flooded with data, from traditional finance data to alt data, and there are numerous platforms that they can access. So where can investors access the CEF advisor data?
Yeah, so we offer fund profile pages for free, like other places. We also developed about 5 years ago, 30+ indices kind of for both benchmarking ourselves. It also is used for boards and for other places. So public free data on cefdata.com. And then we also offer a daily file, that's a weekly file, and a monthly file for those needing that really deep history. Our data goes back 11 years. And then we even have 11 years of corporate action, so tender offers, rights offer, dividend changes, and how those changes impacted each of those opportunities, discounts before and after, so people can do some back testing of the data. And so, yes, there's free data on the public side, but then obviously we pay for the work with paid data services to clients that have the better need for deeper, granular, and malleable data.
And we've also seen the number of BDCs in the market grow at a steady pace. Can you share with us how CEF Advisors put together the BDC database and why?
Yeah, so I mean, even though BDC has been around a long time, in 2014, they started to be growing at a faster pace, and more of our clients were asking us to use them for their investments and to use the data for their own research on the data side. So we fueled that in February of 2014. And one of the best things we did, we started a UIT of BDC with a partner, and the revenue from that product really gave us the ability to double our data costs before we even sold the product, which is not always easy to do in business, Jill, but it was a great way to pull in everything we could to support the sector. They're very similar to closed-end funds. They have a little bit of an operating company flavor. They have an earnings season of Qs and Ks, but they are an actively managed portfolio, but their guts are private venture loans, typically floating. The leverage is typically fixed, and they're typically around $10 million in average loan size. So these are not large corporate loans you would get in a regular open-end fund or ETF. And honestly, it really was the first way that Congress democratized alternative investments for any shareholder. You can buy one share of a BDC if that's all you have in your budget.
There's growing use of non-listed CEF and BDC structures. What is leading to this growth, and how have you been covering this kind of data?
Yeah, so again, it's interesting. That's another older structure, but really gained traction in 2017 and 18, where you're able to, when we found closed-end funds with too much illiquid or level 3 assets, they tend to have pretty wide discounts because investors were scared about that net asset value or the whole position. So the interval fund wrapper really allows you to have an 80% illiquid level 3 exposure to private equity, private debt, the guts of BDCs. And then they have a 20% liquidity bucket because they do offer investors like 5% a quarter traditionally access to the liquidity. So it's more liquid than a private fund. Typically every fund has a daily net asset value for more just understanding how the loans or equity are moving with current markets, even though they are less volatile as you might expect, not trading in the market. And so you're getting this ticket sizes of 2,500 to 25,000 are normal. And it's a great way to have alternative investments in a portfolio with nothing that could live in an ETF or open-end fund. And like there's a new sponsor that had data in the business, raised $14 billion in the first 2 years as there's their first fund. And then you look at on the BDC side, Blackstone, a big player in this space, has raised $40 billion in a non-listed BDC. We love BDCs, but they can be volatile because they're common stocks, like they move like the market. And if you don't want that volatility, a non-listed interval fund or a non-listed BDC, quality managers are bringing quality products. And we've really grown the data coverage like we did for our listed database to make sure people can understand what's in the portfolio and how the managers are performing or even how their fees are structured.
All right, John, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Always happy to be here. Thank you, Jill.